Okay, so now we're going to get into the slightly more complex examples, but again, hopefully you should be somewhat familiar and comfortable with this from the market structure modules because it's exactly the same, but we're now just overlaying supply and demand into it. Okay, so with this specific example, just think about one time frame. Okay, just think about the 4-hour chart. It kind of helps you visualize it. But we're going to look at the 3 different types of structure. And if we got an example like this, sort of how we can trade it using the frameworks and the rules that we use, right? So let's start from the start and take it nice and slow. This is our swing structure. Big swing move to the upside. We pull back and then we break swing structure to the upside, right? So when we get that break of structure, what can we do? We can look back and look for where did the demand step in that led to the break of structure, okay? And you're going to get that pivot created demand at the extreme of the move, right? That led to the move. Now, in other examples, there might be, you might have this one, obviously at the extreme, but then there also may have been a bit of a pullback here and led to a movement like that, right? So then you would have another zone. So you'd have that zone and then you would have the extreme as well, okay? So that's what you can do. Once you get that break of structure here, you can look back for where was the demand, if you can spot any demand zones that led to that move. Okay, cool. Once we have that break of structure, what do we now expect? We expect a swing pullback on that time frame. From a market structure perspective, what signals can we look for to help us or to help signal that that swing pullback may be starting? We can look for a chock, right? Or we can look for an IBOS, okay? Now, obviously, when we get a chock at that moment, that only gives us true confirmation that it's an internal pullback because it could pull back into this internal low and continue higher. But it's the first early signal. It's that first little bearish structure shift. If we had price action like this, where we had that internal pullback and then we get the bearish IBOS, that's really good structural confirmation, right? That we're now, in the swing pullback phase, okay? So again, hopefully you should be familiar with that from the market structure module. Now we're overlaying, right, supply onto this. What could, again, give us an early signal of potentially when that swing pullback may start. Hopefully you've guessed it. Yes, we can look left at old price action, like we just talked about in the previous example, and look for where are there unmitigated, ideally unmitigated, completely fresh zones. It doesn't have to be completely fresh zones. Sometimes old zones that have been tapped into will play out, but ideally the ones that are completely unmitigated are the ones I'm going to be concentrating on. And I'll draw that zone across here. So now as price comes up into here, at this exact moment I'm circling, you could look to get short, okay? So whether you enter, directly, this could be your entry time frame. Maybe you take an entry like that and you're targeting down, or perhaps you'll jump into a lower time frame once price reaches down and you'll look for your entry model. Again, we'll talk about this in future lessons. But the point is at this moment, you could try and anticipate that this is where the swing pullback is going to kick in, right? Hopefully you can guess why that's quite risky. And it's risky in terms of the amount of confidence you have. Because at this moment where my mouse is, if you're trying to short, the fractal structure is bullish, the internal structure is bullish, and the swing structure is bullish. So you have to be super confident in this zone that you're trading from, right? And again, you could have the best zone in the world with all the confidence, but sometimes the trend will be strong and price will just push straight up through that supply, okay? So that would be kind of your riskiest entry if you wanted to short and play the swing pullback, is getting in as soon as price reaches that zone. If you want a little bit more confirmation, what's the first thing you can wait for is you can wait for a fractal structure shift, which is that's a change of character, right? So when you get that change of character, that little demand zone, that fractal demand is going to fail. So you kind of have that little demand fail and you have the fractal structure shifting. And what is going to cause that chock? There's going to be some supply that causes that chock. I don't know if you can see it, but there's a supply zone there. That's going to be your first sort of extra confirmation to now look to short, right? So point number 4 is you could short the supply that caused the chock. But be mindful that at that moment, that might only just be for an internal pullback, for price to pull back down into this strong low. Because remember, at this moment, if I get the highlighter tool, the internal structure is still bullish, okay? So we can look to get short. We get a bearish chock from this big level of supply. Very, very good early signal that this move may be about to occur. But if we only have a chock and the internal structure is still bullish, then when we get short from the supply, right, you can target down here, but you have to manage your expectations that it might only be an internal pullback into this strong internal low where there's internal demand, right? There's demand that led to the break of structure that then may continue higher. Okay, so you just have to bear that in mind. Okay, now, we see in this example, price reaction demand, but it ends up failing. Okay, so now we've got that bearish IBOS, which is a much stronger structure shift. The internal structure is now bearish, right, between this internal high and this internal low. And now we've got a lot more confirmation to play that pullback. Okay, So that would be when you got even more confirmation. And again, you can look for where did the supply come in to cause that bearish IBOS. And you may have multiple, right? This is when trading's tricky. We don't always know. There could be multiple zones. So in this instance, it reacts from here. We could have a zone up here as well. So we can use things like premium and discount, right? That's what this is, the premium discount from the high down to the low, okay? And it's roughly around the EQ. So, it's a reasonably well-priced zone, and that's where price pulls back up to. And again, this is where we can look to short from, whether it's on this time frame or a time frame below, right? But hopefully you can start to see now how we're picturing, like, market structure gives you your framework, it gives you your expectations, it kind of tells you how much confidence you have to now expect if price is going to keep pulling back or if it's going to keep going in the pro trend direction. Then the tricky part becomes, okay, let's look for, if we're at this section in price action here when price is pulling back, and we know we want to try and capture that internal lower high to play the swing pullback, we have to try and guess where are we going to turn around. And this is where we can look for the supply zones in the previous leg, right? That's what we're looking for, the strong ones that led to that break of structure. Ideally, they're in the premium as well. Again, you could enter directly on here, or what you could do is wait for structure to shift, right? You can look for a bearish change of character from here, whether it's on this time frame or a time frame below. Okay, you can see how there's so many different ways you can do things, and it will depend on each scenario, what's in your plan, blah, 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 blah. Try not to get too overwhelmed with that just now, but just make sure you understand kind of the rules and the frameworks in each scenario. Because if you kind of got those rules from day one and you understand what each piece of structure means, then hopefully when you overlay supply and demand on top of it, it's not too much more confusing, right? If that makes sense. So let's now say we've now got short from the supply zone, which is against the swing trend, right? Because we know we're just playing the swing pullback. So at any moment that swing high low could form, but it's pro the internal trend because this is the internal high. That's the strong internal high. This is the weak internal low. We've pulled back up to premium internal supply and we've got short. Now, where are we going to target? Again, we'll talk about management a lot more in depth, but just kind of think about the framework is yes, we're pro internal trend and we can target the weak low, the internal low, but you have to remember we are bullish on the swing trend. So at any moment that swing high low could form. So when we're trading pro internal trend, but against the swing trend, we don't want to be pushing price too far, okay? So this is where you can either, like I've said here, target the weak internal low, right? So take your profits here, or you could target all the way down until when we reach discount demand, or maybe you just want to use a quick fixed R target and you always take 5R. The point I'm trying to make is you just need to be a bit more aggressive when you're trading against the swing trend, okay? Now, as we're coming down, we're getting near into the discount, right, of this swing leg. That's the EQ. So now we have to start thinking about any moment that swing high low could form. Okay, so when we come down here, bullish change of character, but we know a change of character only signals an internal pullback. That's the internal high, that's the internal low, and then we end up coming down. So that's why at this moment, right, when we get that bullish chock, this is where you go, okay, well, we have pulled down to the discount of the previous swing range. So the swing high low could be forming, right? We've had a bullish change of character. So there's a little bit of bullish structure shifting there. And we now do have demand that caused that bullish chock, okay? This is where a lot of people can get caught out because when price then is pulling back here, if we try and get long, right, there's some logic behind that, okay, because the swing high low could be forming. We've had a bullish change of character. We now have demand that caused the chock. We could get long, but remember, change of character only signals what? It only signals an internal pullback. And at that moment, the internal structure, is still bearish, right? So if price pulls back and now the pullback's complete and now we're trying to buy from down here, well, you're buying from a weak internal low because it never broke structure, never did its job, okay? So that's kind of two things that can help to potentially avoid taking a loss here is that it only caused a chock, okay? So that's not really that significant. And this low here, it never mitigated any demand zone, okay? If price pulls back and it mitigates strong demand here, and then you get the chock, it's a much stronger confidence that potentially we're now ready to go because we've filled up a load of demand from over here, okay? So the difference between getting long here on a zone that only caused a chock and getting long here on a zone that only caused a chock, a big part of that is that we have now mitigated a zone, a swing zone that caused the boss, especially if it's the one in the extreme, okay? Because when we pull back to that extreme demand, really this is the last line in the sand. This is the last level that has to hold. This demand zone has to hold if the swing trend is going to stay bullish. So this is a pretty good place to get long, right? We may as well risk our money here because this should be high probability. So now when price comes down, we mitigate the extreme demand here, strong level of demand, and then we get a bullish chock. Yes, we can get long now on the demand that caused that chock. And yes, it may only be an internal pullback up to supply and then it could continue down. We know that. But you see now how like this is a lot higher probability than this one here. Hopefully that's kind of clear. So let's say we get long and then we're targeting up here. As we come into this supply zone, right? So this supply here, that caused the boss. Because remember, this is the internal trend, up, down. So now we've got long on the change of character and we're playing that internal pullback. We have to be aware that as we come into that supply that caused the break of that low, this is a strong internal high. Price could continue to the downside here. We do have to be aware of that. But hopefully, because we've now come into the strong extreme demand, it's much more likely that the internal structure is now ready to shift bullish because the swing pullback is over and we're now ready to target the weak internal high. Okay. Again, I know this is a lot to take in. I really do appreciate that. But this is why hopefully you should be very familiar with this framework from the market structure module. Okay. All we're now doing is just overlaying these boxes just to show where you can enter. That's it. Okay. So that's your kind of, well, the earliest way you could have got in long is you could have got in long as soon as we came into here, right? You could have entered on this time frame or a lower time frame. Bit more confirmation is you wait for this time frame to have a bullish chock to confirm this level's holding. Okay, boom. Now we can get in on this demand zone that caused the chock. More confirmation would be to wait for price to break this high. All right, so now the internal structure is bullish. That signals the swing pullback is now over. And now we can look to buy from that strong demand that caused the bullish IBOS, right? And price comes in. Again, you could get long straight away, or you could wait for a chock and get in on the demand that caused the chock, et cetera, and we target all the way up. And this is where, as soon as that bullish IBOS occurs and the internal structure is bullish, remember, we look left, any supply zones or mitigated supply zones that might be here, we can short from them, but we know we're just playing a quick pullback play. Again, we come up here, we mitigate supply level that's unmitigated. Again, quick pullback play because we're coming into strong demand to then play that move to the upside. Okay, so it all starts with structure. That manages your expectations, and we're simply just overlaying now supply and demand to help us anticipate where these structure shifts are going to happen. And when the structure shift does happen, if it happens after mitigating our supply or demand zone, do you see how that gives it more confluence? Like here, we had a structure shift, but we hadn't mitigated any obvious demand zone here. So this is I'm a lot more skeptical trying to buy here. Whereas when we come down here, I know we've filled up a load of orders now because there was demand here. There was demand zone. So now when I get that aggressive chock, I have a lot more confidence taking this trade. Okay? And that's the key thing. So let's just take a look at one last example before we hop on the charts. So this example is based on multi-time frame market structure. So in the previous example we just looked at, that was one time frame, but we looked at the three types of structure. This is three different time frames, but it's probably easiest, so you don't confuse yourself, if you think of all of it as swing structure. Okay, that's going to be probably the easiest way to wrap your mind around this, okay? Now, what you'll probably also notice is it's literally drawn the exact same way as the previous example we just went through, okay? And that's where some of your minds might just be really struggling to wrap your head around this. And as you get more familiar with it, some of you, like the penny might start to be dropping about it's all just a fractal nature of the market, and it's all just the same framework and the same rules. But I totally appreciate if you're kind of going through this for the first time. This can be a lot to take in, okay? But essentially, as you see, we'll go through this. It's literally just the same example. But think about three different time frames. So the daily, the 4 hour, and the M15. But it can be any higher time frame, medium time frame, or lower time frame you want. And just think about swing structure, just because it's going to be a little bit easier to wrap your head around. But in the real market, it could be, we could be talking about internal structure. We could be talking about fractal. It gets all a bit mashed together, but you will gain experience with that as we go through things, okay? Right, sweet. So big, thick black line, it's our hard time frame, but let's just call it the daily because it's probably easier to think about when you know what specific time frame it is, okay? So bullish daily structure, we pull back, we break to the upside, and we form a daily high. We can now look back and go, where was the demand that stepped in to cause that swing break of structure? And now we have drawn on our daily extreme demand zone, okay? So that's our daily zone. Cool. So we'll leave that there for later. As price is impulsing up, from a market structure standpoint, we know that we can look for structure to shift, but what can we also look for? We can look left and go, are there any old zones? Okay, here's a big daily zone that we found from old structure that's unmitigated. So we know there's a decent probability that if we're looking for a daily pullback, it's more likely to occur once it hits daily supply, right? Because it needs a daily amount of supply to cause a daily move more often than not, right? Because you might look left over here and you might find some old 4-hour zones or some old M15 zones, but they're unlikely, not always, but they're unlikely to be the zone that causes that pullback. It's usually once it reaches the same zone on the same time frame that then you get that pullback, okay? So we come into a daily zone, we then shift structure to the downside. Now this could be a daily IBOS, it could just be a daily chalk, right? Sometimes there isn't even one, but let's just imagine it's a daily chalk. If we drop down to the 4-hour chart, which is this slightly thinner line, now we can see that the 4-hour chart is now bearish, okay? So we've had a mitigation of daily supply. We've had let's just call it a daily chalk, right? It could be daily IBOS, whatever. Just some structure in a daily chart shifted bearish, but this is the daily swing high. This is the daily swing low. Had a daily bearish change of character. Drop down to the 4-hour chart and we can see that the 4-hour swing trend is now bearish, okay? Now we have that 4-hour supply that caused that 4-hour boss and we can look to get short. And again, we can look to follow this 4-hour swing trend, but we know that this 4-hour bearish swing trend isn't likely to last very, very long. Why isn't this 4-hour bearish swing trend likely to last very long? Well, we know we're just in the daily pullback phase. So we know as we get into below the daily EQ, into the daily discount, and as we approach daily demand, okay, we know there's an increased probability that that daily swing high low could form and the 4-hour chart could switch bullish, okay? So when we're trading counter daily trend, it's higher probability at the start of the move, right? Hopefully you guys should be familiar with that. Now, as we get nearer and nearer down into here, again, like I just said before, you could have a 4-hour bullish IBOS or a 4-hour chalk, and, potentially you could look to long from this demand, but we have to understand, well, we haven't mitigated any daily demand just yet. It's a lot lower probability. But once we actually see that demand mitigated, we now know high probable that that swing high low could be forming. And then if you wait for even more confirmation and you wait for the 4-hour to shift bullish, all right, now you're trading in line with the daily and the 4-hour trend. And now you have a 4-hour zone. So you could look to get long here straight away. Or what else could you do? You could drop down to the M15 and you could wait for price to mitigate that 4-hour zone. Drop down to the M15 because you want a little bit more confirmation that this 4-hour zone is going to hold. Wait for the M15 to structures to shift bullish. Okay, now you've got confirmation the 4-hour zone's holding, right? And now we can get long from the M15 zone. Okay, so on one time frame, right, you have the daily swing higher high, swing higher low, swing higher high, pulls back to forms swing high low, and it continues. Nice and simple. But within that, what do we have? We have the 4-hour trend, right? So this is where we can trade that bearish 4-hour trend, but it's within the daily pullback phase, okay? We can look to get long from within here, right? But at this moment, we're against the 4-hour chart. Once that 4-hour chart then shifts bullish, okay, cool. Now we're trading longs of pro 4-hour and pro daily, right? But for the 4-hour chart to pull back, what is likely going to happen? It's likely, not always, but it's likely the M15 is going to shift bearish, or at least the M15 internal structure. You'll see some sort of structure shift on the M15, right, to facilitate that 4-hour pullback. And you can look to get long in here straight away, right? You can do that. Or if you want to again wait for a bit more confirmation, wait for that bullish M15 structure shift. Okay, then look for price to pull back into the M15 zone. Maybe then you want to jump down to the M1 time frame. And what do you want to do on the M1? You want to look for the M1 to shift bullish, right? Then you've got M1 confirmation of the M15 zone, confirming the 4-hour zone, confirming the daily zone, right? You see how it's just fractal. It all turns on the lower time frame first to confirm the higher time frame, to confirm the higher time frame. But we don't start on the lower time frame. We always start on the higher time frame and then we work our way down, okay? It all comes from the higher time frame. So again, for some of you, you've probably got this. Happy days. For some of you, this literally, I might be talking gobbledygook to you. It might be a completely foreign language, and I totally get it. I don't want to say complex. I don't want to put limiting beliefs on you, but this can be quite a lot to take in, especially if English isn't your first language or you're new to trading or new to the style. Don't worry, right? It's not supposed to be super easy, but I promise it will become easy as long as you're consistent with learning this and sticking to it and really trying to wrap your head around it. But it all stems from having a solid understanding of market structure, okay? Because if you just jump into the market and you just start looking for supply and demand zones that are broken, a high or a low, it's broken some structure, and you try and trade from it, but you haven't done the work to really, really understand the overall multi-time frame narrative, the story behind price action, really manage your expectations of how far price is likely to go. Simple things like the market's not as simple as nice pullbacks and everything just goes. Like sometimes you'll go, okay, we've mitigated daily extreme. The 4-hour chart's now shifted bullish. So the 4-hour and the daily are both aligned, right? M15's pulling back. And you might go, okay, once that M15 shifts bullish, right, this should now be in theory this zone I'm drawing is an M15. This should now in theory be a strong M15 zone. Why? Well, the M15 is bullish, the 4 hours bullish, the daily is bullish. It's very likely we've had the daily pullback. So now as price is coming into this M15 zone, right, I'm thinking, and I would do, this is super high probability to get long, right? But it could fail. It could easily fail because price might want to come back down again and it might want to mitigate this extreme zone, right? We never know with 100% certainty. Sometimes it will react from here and go, and there might be a demand zone in the previous leg. Sometimes that will fail and will come down lower, right? The market's not always as easy as I'd love it to be, right? But what it comes back to is if you understand the frameworks and you understand those rules, then in every single different individual price action scenario, you will understand how to manage your expectations when you understand the core frameworks because you always apply it. Okay, so watch this again and again and again, and then we'll go through some examples on the charts, and hopefully it will start to become a little bit more real. But this is just something that you every day turn up, every week review the charts, and you will see week by week by week slowly how price action plays out in a live market. As you map on your swing highs and lows, you map on your structure, you draw on your zones. It takes time, but you will get a feel for how the market moves, why things are respected, why they're not, how to manage your expectations. You're not just going to get it from watching this and going, yep, yep, yep. And then I'll show you some examples, go, yep, yep, yep. Like in a live market, it's tricky, okay? But it will come with time, and I promise you will get it. You just need to stick with it. But when you get this, it's like having X-ray vision of the market, and it all just becomes sort of, one beautiful symphony, as someone described it, of where everything sort of comes together. And you don't need to kind of, because right now, it's when you're learning a new thing, it's like when you first drive a car, right? We talked about this at the start of the technical analysis module. You've got to think about everything. You've got to think where you're putting your foot down and put it in the right gear, and you're checking on the mirrors, and like you're constantly thinking everything that you need to do. Whereas when you're used to driving, you just drive. Like you're thinking about completely other things. You're not even thinking about driving, you just do it subconsciously. That is what eventually will happen when it comes to charts. You literally just look at chart, you mark a few things, and you almost already know everything that's going on and what you're expecting, and you will get there. Cool. Hope you took some value from that, and we'll hop on the charts the next one.